Okay, so today I want to talk about manual trading. Okay, and so we're not going to look at autopilot because autopilot, will do its thing. But the rules I'm going to explain to you is the rules that autopilot is using as well. I mean, not all of it is implemented yet, like I just explained a minute ago. But let's go over it. So first of all, when it comes to trading, you have to start with levels. Okay. Um, and when you look at the morning plan that I post pre-market, these are the levels. And I just want to look at it again just to make sure everyone understands how to read it. Okay. Usually you're going to see a pivot level. Okay. So that is means that if we're below it, we're more bearish. Now, obviously, if we bounce and we go up, then it might become bullish. But the idea is that for the bulls to be in control, you want to be above the pivot level. And if you're moving down below it, then obviously the bears feel more encouraged. Now, the thing you have to understand about trading is that when it's a balanced or two-sided market where both bulls and bears are equally active, it's just going to be chop. Okay, so I'm going to talk a little bit about how you identify chop, but the idea is if you trade while there's chop, you are a gambler, you're going to lose money. So the first thing you have to control is not trading when there's chop. So you have to recognize chop, and we'll talk about that. But then levels. Okay, so when you look at the morning plan, the pivot level, so basically we're saying that the bulls are not really in control unless we're above it. Okay, and then these arrows will say if the price is in this area, then we expect upward pressure. Okay, and if it is in this area down here, okay, we expect downward pressure. Now, every line you see is a possible bounce area. So look how beautiful this works. So the market opened, we went down. Where did it bounce? Okay, can you guys see that? So basically, if you're in a trade, you're gonna watch these. So you want to lock in uh, profit progressively at these levels. Now, I'm not listing the Mancini levels. These levels are very good. I basically look at these, and sometimes I put the Mancini levels on. And you should look at both. Okay. But the idea is that the levels will show you where buyers and sellers recently stepped up their game. Okay. So when we started going down, you can see this hard bounce here. So obviously this hard bounce is very bullish. And I want to encourage you to use the 15-minute chart to look at it because this makes it much easier to see chop. Look at this, up and down, up and down. So there's chop. Okay. So when you have a lot of big candles, it's chop. When you see long wicks, it's chop. Okay. Now look at this movement here. So you have smaller consistent candles, shorter wicks. So can you guys see that there's chop, then there's a trap here, okay? And look exactly where it bounces at this level, okay? And this level has been on the previous day's charts as well. So look how beautiful it is. We get a nice bounce, full consistent candles going up. Then we get up here and then we reject again. Okay. So first thing, identify chop. Okay. If there's a big candle, don't trust it. Okay. So big candles are there to get you to chase the move and lose money. Okay. Big candle down, don't trust it. Wait to see what happens. So you see these small candles sideways small candles, anything sideways, that's chop. So you can see this is chop. So if we break, so you can draw a box around this, and then you can say if we break below it, you can. But I don't really do a whole lot of that. But you can. But you can put a box around it. If we break out of the box, you go down. But you can see we break out of it to the downside. If you chased it without good stop loss management, then you might lose money. Now, uh, Auto trader is pretty good. Like if you took a trade down here, it probably would have made you money and it would have locked in a lot of those profits. But then you have a bounce at a level. Okay, so expect possible bounces at these levels, but obviously trade what you see. And again, none of what I'm telling you today is financial advice. I have to just remind you of that now that we have more people here. This is how I trade. Okay, so I'm telling you how I'm trading. So bounce at the level, small candles going up, levels. So at any level, you want to lock in your profits because we could reject. Okay, now we have this going down. Market opens. Everyone's nervous because there's important news at 10 a.m. Guess what? They're selling off. Hard bounce at one of our levels. Great. This is very bullish here, but we know that we could see traps. Okay. Now, so that's the high level. Now I'm going to talk about the actually how to look for specific trades. Any questions before I move on? Everyone good? This making sense so far? Okay. I'll take that as a yes. So let's go ahead and you can speak your answer, you can type your answer. So now, so the next thing I look at, and it's a little squished because we have limited real estate to record it for everything. But the way I look at it, so this is our trend trader. We have our levels on here as well. The little triangle is the 1 minute chart triangle. The big triangle is a 2 minute chart triangle. I only look at the 2 minute charts. Okay. Now, with our indicators, yellow always means up and blue means down. Okay. So that's one thing to remember. Then we have up here, I have the money flow and buying pressure. So these vertical bars, that's the money flow. And that tells you how strong the move is. Okay. And then the line, that's buying pressure. Okay. So now, as looking for a trade, I'm going to look at this and I first start with the big triangles. Okay. So if I have a big yellow triangle, it tells me that I'm only looking for longs. Okay. So when I see a sudden drop here, I'm not looking to take that move down. Okay. Looks like, are you guys still there? Because my chart's just refreshed. So you guys can just type answers into the chat channel, or you can open up your mic and just speak. Okay. So, so first rule, you start with the 2 minute triangle. Okay, the big one. This is saying that we're only looking for longs. Okay. Now, this is VIX below here. Okay. To be safer at taking the trade, we want VIX to agree. And we know that VIX moves opposite from ES. Okay, it's built that way. That's why I only trade ES, because I have this cheat code with VIX. So we see on VIX, we have a blue 2 minute triangle that says down on VIX, which means up. This says up. So you guys can see that we are looking for upside moves. Now, we're very late in this move, but I'm still going to take the move. So to take the move, I'm just going to go to my demo account, and I'm always going to use the alpha zone. I'm going to say, I'm going to go long. I guess I'm going to reload that. I'm going to say long. So now I have longs that's open, and it's only going to try and get in at the alpha zone. Do not take the join which will join at the current price. Okay, because you're going to overpay, and most of the time you're going to get stopped out before it moves on with you. Now, like I said, we're getting in very late right now. This was the better time to get in, but it was before the news, and the rule is not to be in a position when there's a market moving news event, because it can very easily just bounce up and down and then stop you out, and then you can lose money. Okay. So So when we have a yellow triangle, the next thing I look at is buying pressure. Okay, so this is the alpha zone, this purple cloud. So we want the alpha zone to look good and not broken. The fatter it gets, the better. Okay, so we want it to be upward sloping. We want a yellow outline. So this yellow outline here, the thicker line, matches the buying pressure up there. Okay, so that it's right there in your face, and you want yellow on both sides of it. So now this tells you that this is a good move. And again, anything can happen. So that's why Auto Trader gives you those stop losses and everything else. So VIX is down here and it's below its alpha zone. And we get some flames here as well, which makes it even stronger. So now again, this looks like a good move up, but we always want to go back to the 15-minute chart and say, okay, what's happening here? So we got some thin structure here. We have, this is the previous day's low up there. So I do expect a gap fill today. I mean, if we don't get a gap fill because, oh no, that's not, that's the previous day's high. So this is the previous day. And actually we just filled the gap, so that's good. If we didn't fill the gap to yesterday, that would have been very bearish, but that's filled now. Um, so you look at the previous day, so you look at 15 minutes, and you can see it was very, very extremely choppy there. This was choppy. So when we go up here, you look left, and now you see that there's some thin structure here and a reject at the pivot level. So we're playing the move up. We could reject at the pivot level, so you definitely want to lock in some profits over there. And if it keeps going, obviously hold runners. So let's go back here. So you can see we're not filled yet. So you can go and chase the move by pressing the C2 once. So that's gonna, so you're trying to go long at the alpha zone. When you press the C2 button, you put, okay, we just got filled there. So that says now I want to be 2 ticks above the alpha zone. Okay. So now we got filled, and you can see that it changed completely. So now the buttons are, we can exit, so we can lock in the position. We can move the stops to break even. Now, when you do that many times, you're going to find that you're just going to get stopped out and it's going to move on without you. So now, Auto Trader, I didn't click anything. Auto Trader automatically moved the stops up based on the price action. So now when this goes green, it means that we basically have a safe trade. So now we're at least at break even. And this will tell you the dollar amount if the stop gets hit. That's how much money you should be walking away with. Now, at any time, you could say, I want to up the stop, and now it's taking you closer to the current price, but also it increases your likelihood to get stopped out in profit, but you're going to lose out on a move if that happens. So now we just got built there, and you can see that we made 62 times 2, so 130 bucks basically, 25. So that was our first trade for the day. And again, that was basically, we increased, we upped the entry, and you can see that the drawdown was only 1 tick. So if we did not chase it by 2 ticks, we would have never been filled. Okay, at that time. Okay, so we got filled. It went down by 1 tick, and then we locked in profit. Now it can keep going, but if I'm going to look at this chart, we are at a level that we might reject. But again, right here we see that the bears are trapped here at the bottom. Okay, now that doesn't mean they'll stay, that they will stay trapped, but you always want to come back to the 15-minute chart. And I mean, honestly, this is all I'm looking at, this 15-minute chart, and then this chart where I have ES and VIX. So I mean, so you could probably get into another long here if you wanted to. I'm not gonna do that right now because I'm explaining how things work. But you see how well the stops are managed by Auto Trader. Now, if I go back here, this is the M2 interface. This and this is something we've had for quite some time. Okay, this takes ES and it gives it to you in like a cheat sheet, in a card, and it says, okay, our relative volume compared to other days at this time of day. So this is relative volume by time of day. So it's immediately useful even in pre-market. So you can see that we have high volume. Okay. You can also see that currently we're at the 48 cloud, so expect chop with where we are right now. So if you're gonna go back here, there's the 48 cloud. So right there. So we're above it. There's 48. It's brown, so that's downward sloping. If it's blue, it's upward sloping. But the good news is we're above it. So but we're having some chop because we're at the 48 right now. Okay. So going back here. So this cheat sheet, I'm actually going to move onto the Auto Trader page so that you can have it here. I'm also going to move the latest Mancini tweet. So this tweet, I would encourage you to always read it. And actually, if you have M2 open, it will verbally read the tweet for you. So when he posts a new tweet, it will immediately verbally read it for you so you know what's going on. The guy is really amazing. So when he says it's just chop now or respect this level or that level, absolutely, consider his advice. So I'm going to move the Mancini tweet and then this cheat sheet over to Auto Trader so you can see that. But the bottom line is, so you're going to look at this so you can see, okay, I have high volume. Okay, we could see that we're also up from the open. So this is saying it's green, we're up from the open, and then from the previous day, we're up. Actually, we're down, we're red compared to the previous day still. Okay, so there's the bias that's based on the Ripster EMA clouds. So we don't have a clear bias right now because we're at the 48. If we're above the 48, then the bias is bullish. If we're below it, then it's red, it's going to be bearish. Trend. So right now we have a trend move going up for green. Why did it just refresh that page? Okay, so it also contains all of the news, and so the news countdown will, I'm gonna move that there as well. But basically, so we're in a trend move. The buying pressure says we're moving up. Buyers are in control because it's green. The alpha zone is nicely structured. Um, Market tide is mixed at this point, so that's a product from Unusual Whales. And then this is saying that the 2-minute triangle on ES is green. The 1-minute triangle is green. VIX and the VIX colors are inverted in this thing, so when you move over it, it's going to remind you of that. So the VIX bias is downward, so that means for ES it's up. VIX trend. So when all these dots are green, this makes the likelihood of the longs working out much bigger. Okay, and you can also see that we're looking for possible traps. So the bears are drowning, so we have things like that. We have a gap fill that happened. So gap fill, you could have a gap fill reversal, but these are all the things you want to consider. And like I said, I'm going to move it over uh onto this page so you can just look at one thing. But you have to know that just just because you know that longs are more likely going to work doesn't help you if you get into a bad entry. Like if you got in at the top of a candle and it goes down and stop you out, then you are going to be stopped out at a loss and then not be part of the move. And you can see how money flow is really getting strong here. So your entry is super important, and that's why the best way to get in is at the alpha zone. So if you want to go long, You're gonna go there. Okay. So I'm gonna explain this dialogue here, but before I do that, let's see, is there any questions from anyone at this point? Okay. So when you get in, um, there's two types of trades that you can take. So yeah, I'm sure everyone's trying to take trades right now. So that's um why we're not getting any life. But I mean, I can explain these things to you after the fact, and then it's super easy, or I can explain it to you in real time, and then it has much more value where I don't know what's going to happen either. Um, but you can see how the alpha zone is nice and clean. There's little interaction. So the more that the VIX cut into the alpha zone or ES cuts into the alpha zone, the more choppy it is. Okay. So you can see that even with this chop at the 48, we respected the alpha zone. So that's very bullish. We're at the pivot level. So we could reject there, but if you look at VIX, VIX is very strong to the downside. So that gives you confidence to go up. And I'm going to show you if I get in now and I just hit long, okay, and I have some Wi-Fi problems here, obviously. But if I'm going to hit long here, and oops, now I'm in multiple times. So let me cancel those. Um, so now it could still work out, but the chances that I'm going to get stopped out to the bottom is much bigger because, I don't have a great entry at this point. So if it comes down to the alpha zone, I'm going to get stopped out. So let me also then get in at the alpha zone. I'm going to, just move up a couple of ticks. Uh, and you can set up. So I just take a bunch of testing trades here, so to make sure everything works as expected. But when you look at this, you can say when I get in at the last price or the current price, or at the alpha zone, to get in early. So two ticks. So you could say I want to get in two ticks early. So now it will be two ticks above the alpha zone or above the current price if you take it to 2. If you take it to -2, then it will be on the other side, so it will be below the alpha zone. And obviously with puts, with shorts, everything's opposite. Uh, and so let's look at this move. So we're still up there. So when you look at this, you can see that we're still not really making any money here, because, we didn't get a great entry. And then at this point, you could say, okay, I want to move to break even. I can even, and then you see you immediately get filled. So now you're out of this move. This one comes down like we expected because we did not get great entries. And that's what I'm trying to show you. So this one, now this one got stopped out, okay, which is exactly what we expected. It got stopped out at our stop loss, and we just lost $125 on it. That's why I'm using the demo account to show that. And then this guy is hopefully going to get filled because that would demonstrate my point. And if that gets filled at the alpha zone and then it moves up, we're going to make money on that. But we lost money by not waiting for a little bit of a pullback. So we just got filled there. Okay. So now, hopefully, this one is going to make money and it just, doesn't just keep dropping so that I can demonstrate the point. But this is the better entry to get in at the alpha zone and not just where you are. You want to wait for that pullback. And that's what's nice about, um, Auto Trader is that it makes it easy for you to get in at the alpha zone. Now, if you say, look, I'm starting to see blue triangles, you can immediately, oh, we just got stopped out there as well. But so you could immediately just um, up it or just exit the position. So you always have those options. And again, if when you take a trade, it's important that you get in here at the beginning of the trade when the triangles change. So the longer you wait to get into the trade, the bigger the risk of a turn. And like we said, we're at an important level, at the pivot level, so we could reject here. And what you have to understand is that this is where buyers and sellers stepped up before. So when we're below it, then basically you expect the sellers to step up with the first interaction. Now, this also means that the bulls that got in at this point, they're going to take profit here, okay? So you have to understand that these bulls that got in here or here or here or here, when they see big candles, because we always say that the way we trade is we're going to try and get a risk-free trade. And the way we do it is that we're going to buy a couple of contracts and then we're going to lock in partial profits at levels or on big candles. And when you do that, now that buys you the second trade. Okay, so the idea is that when these guys get in there, they see a big candle, they're at an important level, because I mean these levels are not rocket science. Just because we know what they are and we're really good at spotting them and documenting them doesn't mean that no one else knows that. Okay, so you expect profit taking. That profit taking is gonna make the price drop. That's as simple as that. So your first interaction with important levels, you will usually get a rejection moving up. And when you go down, usually you'll get a bounce. Not always, but if you look at the probability, it's bigger than not. So when these big candles also happen because these are bulls that were late to the party because they didn't get in there and they started chasing the move. When they chase it, everyone locks in profits, it goes down. So now, so this is what I call an expected test. So we expected this move down. And now the question is, will it be bought up? So will the dips be bought? If it's bought, that's bullish. If it's not bought, that's bearish. Okay. So now what you have to understand is that all the bulls that got in here, locked in the profits here, they're sitting on the sidelines. Okay. And you have to understand that this is like moving a big ship. They are sitting on the sidelines and they're saying, I want evidence that the dip is being bought. If I don't see evidence, I'm not getting back in. And unless they all get in together and push together and pull together, this is not going to happen. So you have to understand that the bulls that locked in their profit, unless they get convincing evidence that we're moving up, they're not joining the party. They're done. I'm done for the day. I'm going home. Okay. I'm starting my weekend, whatever it is. So the idea is, what is it going to take to convince the bulls to get back in? And it's not just a low green candle that's going to fake out the bear. So the good news is we're at an important level that seems to be holding. So that's good. So there's different strategies there. I mean, you could get in at this level because it's, it's one of our levels. So you could say, okay, I'm close to it, so I'm going to get in long. And I know I'm wrong if I fall below it. Okay. And that's what's nice about levels. Like you get in at a level, get in long, you know immediately you're wrong when you're below it. So when you get into a trade, and the way it works is you can immediately, so right now our stop loss is there and it says that means $125, but you can do two ticks here. So you can say I'm willing to risk $50. Or, and you could even close this one. You don't have to take two trades at a time. You can go in there and say, only take this trade or that trade. And I'll talk about the differences here in a second. But so you can immediately say, okay, I want to like risk this much money on the move when you get in, um, and you can see right now the price is very volatile. If you get in at the alpha zone, your chances of staying in the move is much bigger than just getting in at the last price. Okay, so let's go through this all these buttons while we have it up. Um, so again, this is moving the stop loss by 2 ticks, and it will know if you're going long or short. So obviously, if you're going long, that's moving it up. If you're in a short, it will go down. The break even, that just puts it where the entry price was, and then exit, that closes the position, and it's gonna try and get you the best fill as possible. This is your um, take profit. So take profit, my settings is $1,000, and then if you say, okay, I want to get in, take profit 900, 800, so you can move it around. And at some point, I'm gonna let you change these values to specifically so that you can put it specific levels, but that's how it works for right now. And you can see it's word profit, and it moves the stops automatically. I don't have to do anything. It's gonna do that, but I can override it. Now, if I want to completely manage myself, you can click on this, and then so now auto stop loss management is off. So now the stop loss won't change. You have to manually change it, or you can turn it off for a little bit and then turn it back on, and it will immediately manage the stop loss for you again. Okay. Let's quickly talk about this, and then I'll let you guys go because I'm sure you want to go practice what you learned here, and I want to publish it as well. So when you trade, you can do minis, or you can do micros. So when you trade micros, your profit and loss is 10 times smaller than on minis. And then I explained the early entry, what you do there. Timeout. So if you place a trade and it's not filled in 5 minutes, it will just cancel itself so that you don't get filled on a turn later on. And then there's two types of stop loss management that we have today. So the ticks, that is basically uh, the guy that's more aggressive in locking in profits. And the way that it's going to do that is when you have a big move that pulls back, it's going to lock that in. Um, so this is good to lock in some basic profits quickly, and then the time frame. So that uses, you could say, use the 12-minute candles, the 12-minute chart candles, and so then it will move it up below the previous candle's low for long, and if it's a short, it will keep it at the top of the previous candle's um, high. And then both, that means that you place two trades at the same time with these settings. And then you have a trigger. So basically, it will start enacting the stop loss after your profit is up 10 ticks in this case. And so the stop loss management will not do anything until you hit this trigger, and then it will start using these settings. Any questions before I let you guys go? I mean, so this was a very quick overview. We took some manual trades to show you how to do that. Um, and I'm gonna stay on a little bit longer just to tell you guys, how I would do this. But basically, every time that you try and chase a move, you're putting yourself at risk. So right now, we're at a pivot level where we first rejected, okay, which was expected. So now it looks like we are, the dip is getting bought, okay. So I mean, so we we already have a buy here at the alpha zone to get in, but again, it could reject again because if I have this dump here and I come back up, so I get rid of the weak hands. Now, if I get back here, it should be easy for the bulls to make progress to the upside. Okay, because the weak hands are out. If they don't, then that's very bearish. Okay, so we have to make progress here. If we're stuck here for too long, if we're stuck here for an hour not making progress, then the chances of us dumping is much bigger. Now we could come back here and just dump immediately again if the sellers are very strong. But getting into a trade here, like even this trade that I have here at the alpha zone, it's very risky because again we're facing a strong level here from our morning plan. So this is not the right place to get in. Here was all the right places to get in. Um, so usually I won't be getting into a trade here because of the risk. Now you could say, I want to just make my stop loss much smaller. So here, my stop loss, I just say, look, I'm willing to risk $50. So you take that down to $50 and you're like, okay, I'm just gonna get in here, but I want to get a little bit of a pullback. I want to get like at least 2 candles pulled back. So I'm gonna go long. You can see that other uh long order got canceled because it never filled in 5 minutes. So now if we get like 2 ticks pullback, we should be in that move and then we're risking. So there we go. So you can see, even though I didn't get in at the alpha zone, I could still say, look, I want at least like 2 ticks pullback because it's very risky to get in here. And you see there we got stopped out. Um, because again, we know that this is not the place to get into a move. But I wanted to show you how you could say, I want at least 2 ticks, 4 ticks, um, pullback. Now, my rules also say, look, even though I know that we could reject here, I'm not going to look for shorts. Okay. Can you take a short year and make good money? Absolutely. Anything can happen. But my rules say if the 2 minute triangle is yellow, I am only looking for longs. Okay. Now, it's not a good place to get in because of that level, but I'm just going to show you. So basically, if we just say I want to go make sure this is back to 0, and I'm going to go long there at the alpha zone. This is always a safer place to get in. Now it could just drop right through it. We see that here on the VIX. So this is a warning because if VIX has a yellow triangle, that's not good. But that's a 1 minute. You can see that's the big 2 minute. So this is less important. But if VIX goes above the alpha zone, that's more risky as well. Okay. But either way, I'm only looking for longs with a 2 minute yellow triangle. I am not looking for shorts. Even if it drops, that's fine. I'm not I'm not playing shorts because the chances of losing is much bigger. And again, if you get a bad entry, you're gonna get stopped out anyway and lose money. So it's so important that you do not chase this. You want to make sure you say I'm getting in at the alpha zone. And if I don't get filled, then that's okay. I'm not going to chase it. Now, if you do want to chase it, like say I have the C2 button where you can chase it by 2 ticks. I sometimes do that. Sometimes it works. Sometimes it doesn't. Okay. But um, you can see every resistance here. Anything can happen because it's still early. But um, this is why it's not a good time to get in right now. But still, no shorts. I don't care that we're resisting here. I want to see confirmation. So I need, so yellow triangle, longs, yellow buying pressure, longs. So I'm looking at everything that says long versus short. So this says long, yellow buying pressure says long, yellow money flow says long. VIX, we have a blue triangle, it says long on the ES. We're still below the alpha zone. So everything on here says long. Now it doesn't mean it's gonna work out, but there's nothing here that says it's okay to try and buy shorts. So I want to get in as close as possible to the alpha zone. If I don't get filled, that's fine, because if you chase it, you're gonna get stopped out. Like I showed you here, you're gonna get stopped out, and then you're gonna not only lose money, but the move's gonna happen without you. Okay. So now the only time to get short again is to have a blue 2 minute triangle there. And I like confirmation from VIX as well, where we have a yellow 2 minute triangle, and then you'll get that move down. Okay. Any questions before I let you guys go? Does this make sense? And you can type your answers if you're a little shy to speak. Oh, so I see Chris, he typed. Oh, sorry. I'm so used to it reading me what you guys say, but he didn't. Okay. So Rod said, I'm listening, all good. Chris saying, same year. The first Alpha Zone entry we did, I made $700. Thank you, showing me the Alpha Zone entry. Okay, good, it's good, good, good. So people are making some good money here. But yeah, it's very simple rules, and especially like I say, if you watch this card and it shows everything green, then you shouldn't be looking for puts. Okay, so if this is all green, then you should only be looking for longs. Okay, and you want a good entry. But again, so important. If there's chop, big candles, long wicks, lots of cutting into the alpha zone on VIX or ES, that's chop. If we're at a level, okay, this is not a good time to get in. Once again, I just got that trade to show you guys what a better entry is. Because if we reject here, we're gonna go down. Again, we got rid of the weak hands. We're going up. If we're not able to make progress because it should be easy, we're gonna dump. Okay. But again, I don't care if I miss that dump. And you should not try and catch every move. You should look and say, okay, I don't, the indicate you need rules that you have to follow. Okay. And they're gonna work most of the time. Um, but sometimes it won't work. Now, if your rules don't work most of the time, then change your rules, okay? Because then you have bad rules, okay? Um, but when you have rules, follow them, okay? Stick to them. And you can see we're in now at the alpha zone, okay? And now because we're at a level where we could reject, I'm gonna want to lock in, you know, more of my profit. So I'm gonna just, and I'm not saying you should do this, but I'm gonna up that. So now basically my stop loss is $50, because you could be in there and make good money, but I'm nervous that we could reject here because VIX is working on a triangle. And again, I would never get in at this point because we're close to that level. But those are some of the ways that you could just say, I'm going to take my money and go home. But again, don't chase. Um, it looks like we're going to reject here, And again, I won't take shorts here because I don't have blue triangles yet. Okay. But this tells me that, you could probably get like, options makes it easier because it's more controlled what you could lose and you could take bigger chances. But like you could probably get a put options there and make some decent money. Um, because, again, we got rid of the weekends, we went up. It should be easy to make progress. We're not. Uh, we could give it another try. And that's the thing. Sometimes it takes 2 or 3 tries before they give up. And I'm going to watch VIX for that. But you can see the alpha zone, the outline is disappearing. VIXY, so VIXY yellow candles, that's one of our indicators. So this is saying that VIX is starting to push. So, you know, if we break down here, my first target obviously would be this level, but then the 48 cloud and the VWAP, those are the next targets. Many times you come down, it's an upward sloping VWAP. So you expect the bulls to step in, again. And again, that's why it's risky to take the puts, because this could be a very fast move. Boom, they step up, and then we cut through that upper pivot. Okay, any questions? And I'll look at the chat channel. I missed all of the previous chats. I apologize for that. And there I thought you guys were asleep. Okay. So I will let you go since there's no more questions. I'm going to upload the video and then post it for people that couldn't make it or showed up late. But I appreciate your time. Thanks, guys.